the challenge many startups get into is building their capital stack and bringing in investors, perhaps VCs, who have a different view, right? You might want for yourself and your angels and friends and family, whoever else you have in, you might look at that and go, you know what, a 10X is what I want. I think it's reasonable in this market. My minimum is usually 10X. I want 10X for my investors and myself. If I can get something out that's above that or at that, then I have to have a really, really good reason not to take it.
Hello and welcome to another episode of Test, Optimize, and Scale. We have Stephen Forte with us here today, founder and CEO of the BuildClub. Going to be talking about his whole career path, exits, identifying the situations in the building, in the construction industries, and how he created the solution. Stephen, been looking forward to today's chat. Thanks for taking the time to join the podcast today.
Jason, thank you. Happy to be here. It's always great to chit chat about all the interesting throes of being an entrepreneur.
Absolutely. Absolutely. We were talking about some of the obstacles that get thrown at us on a day-to-day basis before pressing the record button here, and looking forward to hearing your perspectives. You've had exits, you've had what many of our listeners would call the dream come to life, and beyond impressed by the traction and growth you guys are having at the BuildClub, and what the next chapters look like. So look forward to getting into that, but thought we'd kick things off with your story, your background. Want to give the listeners, the viewers, a better sense of where it all started.
Yeah, I have a really eclectic, strange background. I mean, I started back in school as high school. I never even planned on going to college, frankly. I was going to machine school at the time, was going to be a tool and die maker. Then I think I went to a party down at USC in Southern California here and found that the girls were really cute. So I figured maybe college is worth a shot. So next thing you know, I joined the Marine Corps. They pay for my school and I started making a career jumping out of helicopters. And once I blew a knee doing that, I had to come up with something else to do and really was a self-taught software engineer. So it's been an interesting journey for me. It's certainly not the typical path people might have taken. I many people joke that they become entrepreneurs because they're unemployable, and maybe part of that's the truth. But one of my first companies I had actually started with my brother. It was called Wilshire Cellular, and this is way back when phones didn't roam. So if anyone's old enough to remember those days when a phone didn't roam between Los Angeles and New York, um, we had about 160 locations that rented these phones in any Hertz Rent-A-Car, Four Seasons Hotel, or other places. And it turned out to be a great business at the time. And an interesting thing came up when I was having a lunch with the general manager of the Four Seasons in Beverly Hills. And he said, Stephen, wouldn't it be great if someone could check into the Four Seasons and their phone would, the mobile phone we're renting from you would ring on the beach when they called the room? Because now, again, for those of you old enough, in the old days when you traveled, you kind of waited for the call, right? You sat in your hotel room. Hey, I'm room 504. Call me after I land and we'll arrange everything, because it just wasn't that propagated yet. So I said, hey, that was a great idea. Maybe we can do something like that. Nothing existed. And that's when I founded a company called Ascendant Systems in Palo Alto. We had about 14 patents and essentially invented a lot of the early technology that connected cell phones to the internet and to regular phone networks. And BlackBerry bought my company way back when. So it was a real interesting journey on that tech side. And from there, I frankly went to turning around public companies, lived in Shanghai and Hong Kong for 10 years, ran mid-market companies there, then ran a $1 billion P&L. We took public as a PLC called Coates, which was a fantastic experience, and then did private equity in emerging markets, Kazakhstan, Uzbekistan, Myanmar, Russia, other places. And the interesting thread I think all of my career has had along the way has been that I've really enjoyed bringing high tech to low tech industries. And it's amazing how much opportunity there still is in the space. And frankly, a lot of that's what brought me to BuildClub. And I assume this is probably a lot about the clients that you work with who have kind of similar stories of deploying technology in new spaces.
Absolutely. Absolutely. Activating in industries where the technology is new, different. I love the way you put it, of high tech to low tech spaces, and seeing what's working over here, bringing it over to users, to audiences, to businesses in this sector, in this vertical. And, following around your career path, hearing about exits to BlackBerry, working with public companies, working in private equity and in different emerging markets. It's very impressive. How did you choose to focus for the Build Club on the world of construction?
It was kind of an interesting journey. I own some properties. My wife has had a design build firm for about 25 years. And there just wasn't a moment that that electrician making 200 bucks an hour didn't show up at the job site and, disappear at 11 a.m. to go to the wholesale house. And after a few conversations with these folks, you're like, hey, man, this is why you're not buying your ski boat this year. You're spending 20, 30% of your time fetching materials, piloting your truck, whatever. It's just highly inefficient. And of course, as many people know, that little trip to Home Depot that's down the street, it's rarely that 20-minute exercise, right? You get there and you go, gosh, the inventory was wrong. They don't have it this store. They have another store. You go somewhere else. You grab a burrito at lunch, whatever. You come back, you've killed 3 hours. And this just erodes efficiency in the business. And you said you may have seen some of this in a renovation you're doing right now.
That's absolutely correct. It is happening. Also, it resonates with me. My father was in the coffee service industry, and in the 90s, office managers were leaving for hours. So it's been embedded in me how much time is lost manually going to get things. And even how, in my day-to-day life, some of the food ordering apps, some of, the Amazons of the world save time. That's what I'm really buying is time and where I can focus those other minutes of the day.
Well, I looked into this market around 2016. When I did my research on the job site, the 50-year-old somebody working on the job site was bringing a sack lunch and using a flip phone. And I just thought it was too early, right? I didn't want to be the pets.com guy. I'd rather be Chewy that shows up, 20 years later. So look back into this at 2019, and literally that same guy on the job site was using an iPhone and he's ordering, a burrito Postmates to the job site because he sees his own time as being more efficient than waiting in line and ruining his lunch hour. So then I knew the timing was right, and our goal was with the Build Club was to kind of solve multiple problems in the building materials industry. So we founded the company with the idea of being an on-demand instant delivery site, very much like you might see an Instacart or Uber Eats for building materials, where people could get to a single platform and not have to search multiple different wholesale houses for components. Right, that's another piece of pain. I mean, there's a lot of pain in this industry, and maybe talk about that for a couple of seconds. Um, the industry is entirely opaque, and it's been designed that way from the ground up. Uh, you know, how many times have you been in that airplane seat, right? And you feel awesome. You spent 630 bucks for this economy seat to wherever, Miami, just to find out the dude sitting next to you spent 300 bucks. And now all of a sudden you just feel screwed, right? I got it wrong. I felt good until I heard someone paid. The building material space is so much like that. Many of the wholesale houses don't even have prices on the shelves. People have to kind of walk up and go, what tier are you? Are you one of our higher tiers? And you get the discount. You never feel like you're taken care of. And so there's complexity there. There's complexity even in purchasing. Many of these wholesale suppliers, believe it or not, they'll still fax you a credit application just to purchase from them. And I mean cash purchase, not even getting credit. They kind of want to, there's so much friction, right? So we said, hey, look, let's see if we can eliminate that. If we can create a catalog of all these products, let the builders, contractors, DIY homeowners go to a single site and find anything they need, electrical, plumbing, roofing, installation, doesn't matter, right? And have it to them in a few hours. Can we get that done? So there were three key things we had to do to make that work. The first piece was really the data, right? Much of this data isn't available. And it's not serialized in a sense. Think about Home Depot, right? Let's talk about Amazon first. What makes Amazon work, right, is that that a size 10 and a half Nike Air shoe has a particular size, shape, weight. You know all the dimensions. You can immediately calculate how much it costs to get it to UPS to wherever, Marina Del Rey, right? Building materials are entirely different. uh, a 4x8 piece of plywood. Well, is it 4 ply? Is it 5 ply? Is it southern yellow pine? Is it Douglas fir? Is it fire treated? Is it not fire treated? There are so many different components, and none of this has a UPC code or a serial number. Meaning that if you go to Home Depot and you look at a piece of that plywood, It's very difficult then to go to wherever, Jones Lumber, Lowe's, Menards, any other supplier, and identify that exact specification of a piece of plywood so you know you're comparing apples and apples, right? You have to dig through the specs. Okay, wait a minute. Oh, wait, this is structural level 1. This is exposure. This is interior. It's a real pain in the butt. So we wanted to solve that. And we had to do that through data. And we collect now about 17 to 20 million records per day. We track about a million SKUs of all the suppliers in many regions now. We're nationwide. We absorb that information into our systems, and we use a lot of machine learning and machine vision to figure out which pieces of those plywood are actually the same. And when we determine that, we assign our own serial code. Then we know when you're buying that material, which materials to show you. We've really discovered along the way that that's the most important component. So when we founded the company, then we did a couple of other things. We put together an e-commerce site so you could actually buy it. And then we pulled together last mile delivery in the beginning with our own trucks and later now with contract providers to actually have that delivery. So it's been an interesting journey. And where we really found the value is in this space is frankly with the data. So we've decided to really recently double down on what we're doing in the machine learning and AI bit in the back, which, everybody should be using now. We can talk about that to normalize that data and provide these kind of data services so we can make a portal for contractors where they can actually find the cheapest product with their specification that's closest to their job site.
Absolutely. And as a data guy, my mind's going wild right now thinking about all the applications and machine learning, the recommendations, how you could actually streamline the buy, streamline the prices, and be able to access retail establishments from different areas of town. I'd be embarrassed to tell you how much time my wife and I have spent driving to different areas of the greater Los Angeles area. And I say greater Los Angeles area because it's hour plus to look at, a specific type of flooring or quartzite or, anything about paint. Oh, don't get me started with the paint and what we've been, looking at for different samples, how we've actually had to run out. And it's a whole day, not to knock our contractor. They're good. And if they're listening, we're very happy. But at the same time, oh, yeah, Tuesday, we're actually going to get more paint is actually part of this discussion and here in 2023. So getting an understanding of, wow, I could just have it booked directly from the app. Big Amazon user, would be embarrassed to tell you how many times a week we have packages ending up. But it's because of that ease of use. It's because of the suggestions that some of these shopping platforms to provide. So picturing it in the context of home building and construction, and for businesses that are doing this all day long, not just the end user for one single house, as much as across multiple jobs, multiple teams. It's really game changing and exciting to think about where things can go with the data.
Well, let me tell you about the part you probably don't know. And I didn't know this until we started collecting the material, right? Let's pick on Home Depot for a moment. At Home Depot in the Southern California area where you are, there are over 13,000 items in the stores that have a price difference of 10% or more between the stores. Meaning you go to Marina Del Rey and you're looking at that flooring tile and you're like, hey, okay, $30 a box. Cool. Do they have it in other locations in case they need more? Yeah, they do. What you don't know is it might be $12 a box in Van Nuys or $13 in the Panorama City store. The variance, even in the same region, is unbelievable. We have products. There's a spool of wire, as a matter of fact, that's being sold in the Manhattan store in New York that just across the river in New Jersey, right, is 400% cheaper. I mean, an unbelievable difference. And that's hundreds of dollars per spool. So imagine you're doing a project and you just hit the wrong store, right? So the lack of intelligence to consumers is key. And the other thing we track is not only the difference in the prices between stores, because it's very difficult to tell. To do that, by the way, on the Home Depot site, you'd have to log into each one of the stores and then check that price in that item because it doesn't tell you in any other way. But it's really an extraordinary find. So come to our site, then you'll be able to see actually who's got that item cheapest in the geography. And in many cases, again, it could be 30, 40% cheaper between San Diego and Los Angeles. So someone can make the choice and say, hey, I drive from LA twice a week, whatever it might be. I'll buy my materials there. And then we also track inventory levels in the city, meaning the entire city's level of, say, a particular type of insulation or something. And we track the price histories because no one's ever given contractors analytics, right? So if you're a contractor and you're doing say a major renovation, you're buying a lot of lumber, and do you buy everything you need now for this week, or do you buy everything now that you need for this month, right? Well, if prices are going up and inventories are going down, you may want to buy it in advance. However, if it's going the opposite route, right? Prices are going down, you see inventories in the city going up, you're better off buying next week's lumber next week. You'll probably get a better price. And we pass that information on to the consumer.
By the way, I've seen larger margin gaps with the 45-minute drive difference here. The charges on the west side of Los Angeles versus the San Fernando Valley for areas further out. And then yes, the timing element of it well too. I think I was telling you about some of the flooring and price negotiations because of the time gap and how things have fluctuated since. Uh, I could see where the recommendation engines are going to and can help that allow users, whether it's companies or individuals, to make smarter, data driven decisions over time.
100%. And the message I have to other startup founders that get out there and do this is you really have to get out and just do it. You have to punch your product into the market. You have to start testing because many of the discoveries we'd had, I had never anticipated before I founded the business. So when I first founded this business, I originally put it together as like an Instacart. And the idea was we would list all the stores on our app. Hey, why not? And my fear was that a standard contractor would say, hey, who the hell is BuildClub? I'm not going to buy anything electrical there. They might set the house on fire. I'm going to have liability. Boy, nobody cares. I had no idea. So within the first month and a half after we launched 2 years ago, we actually wiped all that out. We put our own brand on it and we just sold everything because it confused people. They're like, hey, are you a supplier to XYZ electric company? Where do you fit? And it just got confusing. So it was interesting, these things you never would have known if you launched, or like I say, these pricing variances. I would have had no idea that a single vendor could have 40, 50% price differences with stores that are 2 miles away. And, so any entrepreneur that's out there looking at these things, you got, when you step into the market, and as they say, what was it, Michael Tyson, who said, everyone has a plan until they're punched in the face. And being able to figure that out, because the market does smack you in the face.
So everyone has a plan until they get punched in the face. What surprises, what obstacles emerged as you entered the market? I mean, you did not enter an easy industry. Was there pushback from some of the suppliers, some of the retailers? Were there other groups attempting to do what you were doing? How did the industry respond and how did you navigate through that?
Well, building and construction is one of the last bastions to adopt technology in any meaningful way, right? Other than perhaps moving to digital accounting, right? So we knew it wasn't going to be an easy road to hoe or it would have been done, right? So that's part of it. So we knew customer adoption might be slow. We knew changing behaviors and understanding would be there. We knew there'd also be challenges with suppliers. So it's an interesting industry because the entire retail stack still exists. You still have manufacturer, importer, wholesaler, distributor, retailer, all that's still there, where Amazon wiped that out in consumer goods a long time ago. So you have the middle market companies, the distributors and others tightly gripping on the wall as they slide down to obscurity, right? Trying to continue to find a place in life. So it creates a strange dynamic in there. So we wind up getting resistance from, frankly, just about everybody because everyone's scared that it's going to be a race to the bottom, right? That, hey, once you give transparency in price, people are going to pick the lowest price. Well, it's like, no shit. Of course they are. That's part of, consumerism, right? Where technology should make things faster, cheaper, and easier. And that's really our goal as we pursue this. So lessons along the way were one. So one was that kind of Instacart piece that we had discovered. Two, the majority of our time in this business, we had done that full stack I'd mentioned, all the data work, the hard kind of data science, if you want to call it that. then the relatively, I wouldn't say known science of e-commerce selling and last mile distribution, hitting out our APIs, finding the right partners with the right vehicles who could do the delivery in a few hours. And then along the way, we also figured out that, you know what, at first, that's a huge amount of swath of to do for a small company. It consumes a lot of capital, consumes a lot of time, and frankly, it's been quite hard. So we've decided since that we're really going to focus on what we do best, which is the tech side. So be able to take the input of those products, normalize those products, and create a data play, a SaaS data play, where we can provide those services to customers. Then they can book and buy wherever they like, and we don't have to get involved in the transaction because that becomes a scale issue. So back to the name of your podcast, right? About scaling. How do you scale? In many cases, you have to decide what you want to scale, right? And we decided in this case, we really want to scale our depth and our exposure in the technology and the data side, where we believe we add the most value and no one's really doing. Because there are plenty of other people who are doing e-commerce and doing it well. There are many, many companies that are delivering, and we use those to handle the deliveries. So, does it make sense for us to expend our limited time and resources on those other two components where we're really not adding much value other than aggregating it for the customer um, than we are with data? So we've chosen to really just display all that info to a customer. So, hey, we found the cheapest price for you. There it is. There's the link, whatever. Lowe's in West LA has your cheapest price of wood, and automatically extend out to APIs and say, by the way, if you needed it today, here's the three companies that could deliver it today, and here's the price to getting it to you in about 2 hours. And then the consumer can make their choice, right? Here's all the best choice of everything that I need and make that choice. And that's where we've decided to really send the company and add the greatest value to the market.
And I know you guys have done a significant amount of deliveries already. You've expanded to multiple states. What does that mean for your growth model? That you can share, of course, today. What does that allow for in terms of that ultimate scale?
We've done we've done 7,000 deliveries or so. We've delivered about 300,000 items to customers. So we kind of understand the market now, and that's important, right? We have that track record of getting what's going on. So our goal now is to really scale again as a SaaS company, and it's much, much easier and it's much, much more cost effective. So one of the things, again, I look at as an entrepreneur is I love what I'm doing. I'm going to transform this business, but at the same time, I'm here to make money, right? And I'm here to make money for my investors who, in many cases, have the same class of stock I have. So, how do I get the best multiple for my investors in the shortest period of time with the least amount of risk, right? So, I always believe in allowing yourself to have an exit at a lower number, meaning if I can run a SaaS company, raise $10 million, sell for whatever, $100 million, and get the multiple I need from my investors, that intrinsically is better than raising $100 million and having to sell for $1 billion, right? Because you have a lot more risk between going from the valuation of whatever 50 to a billion, and it takes a lot more time. And frankly, there's a smaller universe of companies who can afford you at $1 billion than companies who can afford you at 100 million. And ultimately, these are the decisions I think many entrepreneurs make and say, okay, well, what is the best path for me to get a return to my investors with the least amount of risk in the soonest amount of time? Because obviously, time is always a risk factor as well, right? We don't know what black swan comes flying in, COVID 2.0. Who the heck knows, right? So the sooner you can get things going, the better.
That's a great recommendation and has not been worded exactly like that here on the podcast. Well over 100 episodes. Magnitude, market share. These are all points of the discussion, but the timeline and how there are inherent risks with being a company for longer versus going for that exit sooner, even if it means a tenth of the size of the exit, and that you're more focused on the upside, the percentage increase for your investors. You've had a very successful campaign here on Start Engine that continues growing, but having that focus with the shareholders, like you said, they're right alongside you, is really the initiative for you. And I could feel the experience in the background. You've been down this road, and you're more focused on the actual event. than having it at, $1 billion, just going off your example, and explain the reasons why. There's only so many buyers there, there's so many variables, and many that are market conditions outside of our control. So play for the right finish line.
But this is the risk with your capital stack too, right? And I've been lucky enough to have had a very nice exit from many of my investors, public companies, private companies alike. And I think it's typically because that's a big focus of mine. So the challenge many startups get into is building their capital stack and bringing in investors, perhaps VCs, who have a different view, right? You might want for yourself and your angels and friends and family, whoever else you have in, you might look at that and go, you know what, a 10x is what I want. I think it's reasonable in this market. My minimum is usually 10x. I want 10x for my investors and myself. If I can get something out that's above that or at that, then I have to have a really, really good reason not to take it. Right. I'm in a group called YPO. We have about 30,000 CEOs nationwide that are involved. And the amount of stories I know of the calculator billionaires, right, who didn't sell out to be deca millionaires having zero. It just something changed, something didn't work, new entrant entered the market, black swan came in, whatever it was, they didn't take the offer for 250 million because they felt they were $1 billion company and pretty much wound up upside down in their capital stack and wound up with nothing. So I'm not a huge believer of extreme greed, I guess, is one. And then two, like I mentioned about your capital stack, a 10x return, 15x for your return may not be what your VCs want. Many of them are playing a portfolio theory. They want you to be 100x. And if you can't be 100 or 1000x to make up for all the other losses, that's not cool for them. And this is where conflicts arise at the board if you have that kind of investor. So it's important to understand when you build the investors and capital stack what their funds look like and what their idea of success looks like. So you don't wind up having conflict later where you want out, they want in, you have some sort of conflict, or frankly, vice versa, right? Maybe they want out and you want to stay in.
Well, like you said, be transparent out of the gate, build the right partnerships, let the right people onto the cap table, have those aligned goals. 15x is a lot better than 0x. And being able to look at what's realistic and really valuing time, the most precious resource.
It always is, right? And time's not on your side as a startup because you're always burning money. There's always new entrants, there's new technology shifts. There are things that change all the time. So speed tends to always matter. And then, like I say, when you're picking those partners, when you're looking at VCs or investors, the thing I like to remind many of my colleagues is that bringing a VC on your board is like a marriage, and I don't mean a modern marriage. I mean like old school Catholic marriage. You're not getting out unless one of you dies, right? It's you're stuck. So if you get it wrong, it could be super painful. And I've gotten it wrong in the past and had to work out a great deal of pain over a couple of years. And it's just not fun. And life's too short to have to spend a lot of time dealing with that.
And many founders are just looking at the capital, they're not taking into account the depth, the complexities of a relationship, of a partnership over an extended period of time, speaking to the goals, as you were emphasizing, speaking to all the different elements that can make these arrangements crash. And, to really be an expert at something, you need to have experienced failure around it, right? So being able to take those stories into account, it's definitely clear how you've shaped your path here at Build Club.
Well, and, surround yourself with smart people. I always try and surround myself with people that are way smarter than I am. I have an amazing advisory board, and I have fantastic people with many different backgrounds, many different industries who can give me different perspectives. And one of the first things I ask from them, and frankly, anyone I speak to, is I don't want to hear good stuff, right? I don't want you to validate my theories. I want you to poke holes in everything. Tell me why I'm wrong. Tell me what I'm not seeing. Tell me what you think's there. And if I'm right, I should be able to defend it and bring a smart person along for the journey and show them where my data or my science or my numbers back it up, right? This is why I believe what I believe. Or frankly, they're going to teach me something I didn't see because let me tell you, there's a whole lot I don't see, right? So I think when anyone's building your company, even if it's tiny and you're just starting off and you're building a product, surround yourself with a board of advisors of people of different character, different experience, and different skill sets. Who can really bring something to the party and have a different vision and not feel obligated to just tell you you're a smart guy or gal for starting it.
Founders don't need vanity metrics. They need to know what will allow them to shape, to grow their company. When we're working on the marketing side, on the advertising side, there's vanity metrics that we can look at. We could run a really small ad campaign only to the retargeting pool and make everything look great. But that's not going to allow for scale. And if we're only focusing on the good, we're missing all of the opportunities. So I think that's such a great thing for everyone to take into account. Get advisors that are geniuses outside of your area of expertise. Have them poke holes in what's being done. Even better if they've been down your path and can share with you the cheat codes of what may occur and how to prepare for that or streamline that. And it can
Yeah,
be
don't leave out the
confronting.
funding guys, by the way. A lot of
Mhm.
people think that I need my tech or my other experts. Make sure you put some friendly VCs, not people who are going to invest in you, people who said no, but people who you thought were smart. Get them involved and bounce off because they have an entirely different perspective, right? And the thing look, I've started several startups, okay, but the average VC has seen a million times more deals than I ever have or ever will, right? So there's a great deal of knowledge they gain when they look at other deals, they see things that failed, things that work. So it's important to have them talking to you too in the background saying, "Hey, the capital allocators may not look on that stack kindly or may not like what you're doing here for this reason." And it's a big deal. It's important because you have to fit that box as well.
Mhm. Mhm. Yeah, I speak with so many founders on a daily basis, and some of them don't welcome that type of feedback, especially if it is not in line with their plan. Uh, they're not looking to pivot. They're not looking to test. They're not looking to have those different capital pieces in play. That's not what they had in mind. And like you said, a few market changes, things can shift to zero pretty fast. So even just having backup options, even having preparations on where to take things can make all of the difference. You're given excellent recommendations here for the title of the show, Test Optimize Scale. Want to ask you some questions that could package some insights that viewers, listeners can actually look to apply to their own model today, this week, this month. And I like to start out with questions around what to test. We run a marketing agency. It does not have to be around marketing as much as entrepreneurship, overall growth. What can founders, what can marketers, what could VCs who are listening in test for their portfolio companies in path to growth?
You really have to test everything. And I know that's kind of a blanket statement, but I mean operationally. When the order comes in, what does your system and process look like? Test two or three of them. It may not be as optimal as you think. Look, from your marketing team, you know this. I haven't had a single marketing initiative where the best performing visual asset was the one I thought it would be. That's the amazing thing, right? You run Google Ads, you go, okay, here's my 15 creatives, but this is the one I really like. That one I really like has never been the winner. Why? Because we end up having to do A/B testing in all of these. And frankly, I don't even understand why the ones that worked. I mean, some of them I'm looking at going, holy moly, that image worked? Jeez, but it did. So without testing, you don't get that input. And you have to continually validate these things because it's really easy for us to get stuck in our own bubble, right? We're talking to ourselves 24/7 as an entrepreneur. I got this idea, I got this going on here. And sometimes we can get so close to it that we've just kind of missed the boat or we're not looking at the proper context. So I think test everything. Test different investors you speak to. Test who has the highest interest. What industry folks? Is it the SaaS guys or is it the folks who like whatever logistics? Then testing the marketing, the advertising, testing website, testing landing pages, testing your email campaigns, frankly, testing your employees. Hire one from this side, hire one from another side. One of the techniques I've used for testing my technical theories are hiring people on Upwork, right? So if you think you understand that, okay, I'm going to write this script in Python and this is the technology I'm going to use, my suggestion is break down your architecture of what you're trying to achieve, post it as a project on Upwork, and get proposals from people from different disciplines. Someone else may send you a better solution using a different tool, maybe a tool you didn't even know existed, or a different programming language that's better, faster, easier, cheaper. And you wouldn't know it, right? Because maybe you've been focused on Python. So there's a lot of amazing ways you can test theories that way.
We were told the same thing for picking out our contractor. Test out various contractors, get the proposals, see how they're positioning it, even ones that you don't plan to use because it could help shape the one you go with.
Yeah,
And
you learned something, right?
yeah,
The guy says, "Oh, by the
oh
way,
yeah,
this is the extra cost for the installation." You're like, "Oh, shoot, the other guy didn't even tell me about insulation, or maybe he forgot, or maybe he was using blown insulation instead of bat insulation, right?" So, absolutely.
there were clear standouts and discrepancies, and it was a learning process that we were more educated and were able to have that conversation better and better as things moved along. And that's the exact same thing I see with marketing, with entrepreneurship. It also allows you to see where you can test next, meaning if it's not working, hey, let's look at those audiences again. Let's look at the messaging, the creative again. Let's look at the call to action and the funnel. Let's look to manage these to a point of effectiveness, because most campaigns don't work right out of the gate. And if they do, they're certainly not going to stay at that performance level, hitting those same KPIs, key performance indicators, forever. So you need to be able to determine what needs to be adjusted when and if it's not working.
100%. And it's so much easier now to cycle through different tests. I mean, if you just look at what you can do with ChatGPT or any of the other LM tools, right? We can create 3, 5, 6, 10 different landing pages super easy with the right prompts, putting in different keywords, different lengths, and tell ChatGPT, I want to blog about building materials that says we deliver whatever the point is, right? In 225 words, I want to explain this. And you can again then test 10 different landing pages for people and see what works, what message works, what keywords work, where to get better attribution. To where in the old days, it was a bit more painful to make that many iterations, but now
Oh
you
yeah.
can.
Oh yeah. And need the data to show us what's working, which is available today. Likewise, have had assumptions going into a campaign. This creative's gonna crush. It's gonna be outstanding in terms of performance in comparison to industry averages, and it was not. And it was ones that left a scratch in our head trying to figure out why in many situations. So you cast a wider net, optimize towards what's working. Speaking of optimization, and back to the concept that not everything works right out of the gate for a founder who has put their pulse on the market. They've been testing everything. They're still not seeing performance. They're still not hitting their numbers, revenue, users, what have you, that they set out to deliver on. Maybe they're getting pressure from their investors at that
Mm.
point. What recommendations do you have for them towards optimization? What's worked for you and your approach to optimize?
It's data in. So for us, again, imagine say an e-commerce play. It's very difficult to talk to people who don't buy stuff, right? Where does it fall down? And one of the major changes we made in our site was deploying some tools. One particular hot jar, there's a few others out there that allow us to actually trace the customer journey on the web. And we could see where the mouse hesitated and we could see where people got tripped up. We thought it was perfectly easy, right? We understand that flow. You click here, this is your shipping address, this is your delivery address. A lot of people were confused. They didn't understand. Some were colorblind and didn't see, whatever it was, the red button or something at the time. So we found so many flaws in our UI UX by just watching customer journeys and where they stalled, or frankly, where they abandoned, right? Are they abandoning after they built the cart? Are they abandoning halfway through checkout because they're nervous about giving their credit card? Are they abandoning because they're using a much bigger scale on their monitor than we anticipated, and they couldn't see the submit button at the very bottom, right? There's all these kinds of things you just can't test for, no matter how many different platforms we tested on, and we look in our developers and we have QA people. There's just stuff you miss. And it was really eye opening to follow those journeys and find out where all that kind of unspeakable lost customers had abandoned us and allowed us to continue to optimize by deploying and using those tools. And we still use those today.
It's the slightest difference at times, right? Different color button, different set of messaging at the very end. But when you're able to do that conversion rate optimization and see decimals of a lift of a percentage in conversion rate, it can mean a world of difference.
It really can. And sometimes it keeps you from making more mistakes, right?
Yeah.
So if I'm not getting the conversion in my ad I think I should have, and I'm like, damn, I got to go back and change the ads, change the creative, maybe the ad was doing just fine, right? Maybe they're falling off on your site. Maybe it's not rendering properly, or they're not seeing the product that they clicked into isn't coming up properly when they click directly from whatever, Google Shopping. So there's a million different things that can break along the way. And it just takes a really detailed lens and processed approach to make sure you're fixing the right problem and not the wrong problem.
Absolutely. Like you said, the whole algorithm, you could be optimizing the wrong piece. So make sure you're setting up your tests to give yourself the right data and to have the right combinations along the way so you can find that pocket of performance to scale towards. You have a lot of experience of scale. I know we've used the word a lot in the discussion today, but what tips do you have towards scale? What examples can you provide around it? It is very much what we're all playing for. Want to do it sustainably. Want to do it in the right timelines, as discussed. What secrets can we put behind the word scale?
Scale is a stepped approach. My perspective is when you build your business or you build your process, you have to understand fundamentally what scale would look like. When I scale this to whatever 200, 300 million in sales, do I need 600 people or do I need 10? Right. And understanding what you believe the workflow can be. Now, I say that because it's very, very different than what you do when you start up. And fundamentally, when I start very unscalable, right? Doing everything manual in our operations process. And once we find that this is the right method, then we automate it, right? This is the way the order comes in. Looks like it comes fine. The data is looking great. The orders come in, they populate. Okay, that's cool. Let's put a script together, fully automate that process. So we would automate step by step, piece by piece along because you can way over automate too early, right? You can't bring in when you're a 5-person company or something, you just do a startup, you're not going to bring in some massive SAP ERP system to run your operations, right? You're going to need 10 people just to install it. So it's about getting scale right. As I like to say, you can run quite quickly in a pair of shoes that are maybe 1, 2 sizes too big, but you start getting 3, 4 sizes too big, you can't run. So it's having your growth in mind for maybe a 1x growth or a 2x growth with the system you're operating, but understanding wholly that the system you're operating won't be a 10x growth. That you have to make those step changes in your operations and the in the automation in that case in order to scale. And I think that's a problem a lot of people run into is either they haven't either conceived the scale it will take to be the size company they want to be. And if they're lucky enough to have that happen, they can get crushed on the way because you just fall apart, right? You can't deliver whatever the issue is. Um, or the opposite, where they try to automate and make it too technical, and the kind of people you can afford, hire, or onboard quickly can't adapt to your technology, and then you're kind of crushed in the early phase. So it's about getting that scale right, and always having perhaps your shoes, a size or a size and a half, maybe two bigger than you need, but not too big.
Like you said, you got to have that algorithmic roadmap. At 200 million, we need 600 people. Maybe it's 300 million. Here is each step along the way. We're playing for this step next. Some type of growth hack occurs. We jump a few levels. We got to make sure we're doing it right. Otherwise, it could all fall apart. But really, this is the next step. Here's how we're getting there. At the next point, this is what we're going to need. This is who we're going to need. This is what we're then going to be able to use. You're talking about ERP systems and other things that require you to be at different types of revenue, different types of headcount to even think about implementing. So don't just play for the end goal, play for each step along the way. Two sizes too big in shoes is more than enough.
Jason, always plan on the unexpected. The path, at least no path I've ever taken has been a straight line. It's always been a series of twists and turns. And if you follow the growth of any companies from Slack or any of the others, the company they started as was very, very different than the company they ended up being. And we're frankly a bit of that same story. we have a competitor who stepped into our space and raised about 148 million in a single round, burnt it all within a year. And they just really didn't have the discipline on their cash or the cautious optimism on their business model that they're going the right direction, right? But always assumed capital was going to be there again and that they could burn unlimited capital, and it just doesn't work anymore. So it's always important to understand that although even if things are going well, you kind of have to anticipate the ability to take sharp corners at high speed and be able to be nimble enough to make those pivots along the way.
Expect the unexpected. Listening to podcasts, reading articles, it can almost sound too easy. So to hear you say that and mention, hey, I've had all these exits, been successful in all these different areas. I'm still looking for the unexpected daily. I know we need to be nimble and shift with the market.
100%. And look, it's always great when you do these short podcasts and you hear the great things that happen. There are plenty of things I've done that haven't worked, either within big companies, little companies. The key, like most, is getting your ratio right. You just want a bunch more successes, both hopefully in volume and in quality, than you have in the losses. And the loss, you learn more from the losses than you do the successes, frankly. And those carry forward to your success in the future. But it is continually testing. And entrepreneurship's funny. I liken it many times like having a baby, and that's if we're so fortunate as human beings. In many cases, we just don't remember painful things well enough in clear memory. And it's like after you remember the early years of having a baby, you wonder why anyone would have multiple children, right? But you kind of forget about that because there are plenty of good things that happen later. And I find entrepreneurship's the same, right? As I dove back into starting this business, and I wasn't clear I'd do another startup. It all sounds great. You get back into it, and in many cases, you just frankly forget the slogging and the hard work day and night it takes when you truly believe in something to get it going. But it's that passion that keeps you going, and frankly, being humble enough to know that you may not always have the right path, and the world may change on you, and you just again have to take those sharp corners at high speed and just move on.
And as long as you're getting that ratio right, you're going to be able to keep growing no matter how much you need to block out the tough moments. Stephen,
100%.
can't thank you enough for coming in and doing the podcast today. You are a wealth of knowledge. I've taken 2 pages of notes that I'm going to be sharing with my team just on some of these insights. As we begin to wrap up the episode here, any final thoughts you want to leave listeners with? And what is the best way for them to learn more about the Build Club?
Well, the Build Club, you can certainly check out our site at buildclub.com and see what we're doing on that side. We're doing a lot of fun and exciting things. And I think from a founder to founder perspective is talk to lots of other founders, talk to others, learn what you may not know. Look, I've been doing this for a while. I'm learning every single day. There's so much I don't know about any of this entrepreneurship. And frankly, from the technical stack perspective, things are changing daily. And I'm not exaggerating. There are AI tools that are coming out daily that make a transformational change in our business. Our coding expertise has gone 10x, frankly, since AI has really launched. Our ability to write better code faster, do more things, use more machine learning and tokenization and things that were just either too difficult or too expensive for us in the past, we can do now. So the thing I like to encourage any new entrepreneur, use the latest tools, expose them to your great advantage because your bigger competitors are not. So you can step in with those tools, be a fast player, be a new mover, and catch them while they're sleeping because they have too much invested in their old systems. They have too much invested in their old software. The big company employees don't want to learn something new, and it's really prime picking for the proper hunter.
Prime picking for the proper hunter. They move slow. That is a great opportunity to end with. Stephen, thank you again for hopping on Test Optimize Scale. It's been a pleasure. Listeners, viewers, appreciate you listening to the full podcast here. We will see you next time.